Okay, so welcome to the final section of the course, and this is me going to be more talking about the crypto market in general, crypto specific information that is going to help you and the kind of things you want to be looking for to really start taking it to the next level and, starting to process more information and, really starting to refine your trades, okay? So for this first lecture in this section, what I do want to take a look at is the correlations between the crypto markets and other financial markets and correlations within the crypto industry as well, okay? So when I talk about correlations, what I mean by this is just how well any given asset follows another asset, okay? So the impact of one asset on the other. You're going to find many different assets that, follow each other very closely. You'll find many assets which have inverse correlation, which means they basically do the opposite of each other. So when when one asset's doing well, the others tends to do very poorly, and so on and so on. It's definitely something to be keeping in mind when you're trading, okay? Because on this first example, what I'm going to compare is Bitcoin to the S&P. Okay, the S&P 500, which is the index for the largest 500 companies in America, which basically reflects, how the stock market's doing in America. And we will be able to see, it's not immediately visible from looking at these two charts, but the Bitcoin chart and the S&P 500 chart have a fairly heavy positive correlation, okay? And what I mean by this is they do tend to follow each other, and I think the equities do lead the way. They're the more, established market. Okay, the stock market has been around much longer, trades much more volume. So I do think, Bitcoin follows that to an extent because they are both what is known as risk-on assets. Okay, so risk-on assets include, the more volatile, subject to, market circumstance assets. Okay, so equities are obviously an example of this. When the economy is strong, equities do very well, as they have done for a while. And when the economy is weaker and heading into recession, equities perform quite poorly, and Bitcoin does tend to follow this to an extent. And as we can see at the bottom, what we have here is the correlation coefficient. And what this is, okay, so for you guys, if you've got a bit of a maths background, you'll understand this. But with a correlation coefficient, what you get is if the coefficient is 0, okay, so if there's 0 correlation, that means there's basically no link, no discernible link between the asset you're comparing. So with this correlation coefficient, I'm comparing Bitcoin, this chart here, to the S&P, okay? You can find the correlation coefficient in indicators. If you just type in correlation, you'll get it at the top there. Okay, and it'll ask you to input an asset to compare the chart you're looking at to. So I picked up the Bitcoin chart. We're comparing it to the S&P 500 chart, which is here. And as we can see, for a very, very decent majority of time, the correlation coefficient remains fairly close to 1. And we can see pockets of time where it barely deviates away. Okay, this example right here. Okay, so this was April all the way through till nearly summer 2022. Okay. We can see that the correlation coefficient remained essentially nearly at 1, okay? And it does have some retracements when, Bitcoin does have the more volatile moves. It does pull away, but it usually does bounce back to the 1 level, okay? And it does spend the majority of time in the positive correlation coefficient area, so between 0 and 1, indicating that there definitely is some, it definitely is a noteworthy thing to be tracking the S&P against Bitcoin, okay? And how I use this in my day-to-day trading is I will do some more basic technical analysis on the S&P. I'll be looking to see if there's any danger signs, anything I should be looking for, if it's looking strong, okay? And I will use that information to kind of guide my Bitcoin trades. I'll also be looking to see on, lower time frames if Bitcoin is looking strong or weak against the S&P. And, if Bitcoin's looking weak for a while against the S&P, okay, so if the S&P is going up and Bitcoin's heading down at the same time, this is Bitcoin showing weakness. If I'm expecting S&P to roll over and put in a down move, then I could expect Bitcoin to put in a more exaggerated down move, for example. Okay, so there's many different ways of playing this, and the best way to get used to this is kind of have the two charts compared next to each other. Okay, keep toying back and forth, keep looking back and forth. If you watch for long enough on the 1 minute chart, for example, you will start to see there's definitely some, there's definitely some movement where they're both very, very similar, and there is sometimes, great occasions to take advantage of this, and I've pulled off some fantastic trades using this information, okay? Another big part of the reason why this does happen, okay, why you do get this correlation, is because the market makers, market making is something I've briefly touched on in this course, but if you do want to learn more about it, then I do talk about it quite a lot in my server. So the market makers that, provide liquidity for the Bitcoin market and for the crypto markets in general, okay, they use S&P fluctuations in their algorithms to make sure that they're quoting prices correctly, okay, and they use it to basically adjust their risk. If they see S&P's taking a heavy fall, they might reduce some of their buy orders they have waiting to catch sellers, because they don't want to get overexposure on the buy side, and vice versa for the sell side. Okay, so I don't need to get too much into details on that. The underlying details on why that happens aren't too important for you if you getting started in this market, but it is to do with how the market makers operate, and they do include the S&P in the algorithm along with many other assets to try and determine how they should best market make and give the most appropriate limit orders to the market at any given time. So following on from this, what I do want to take another look at is a market which provides us with an inverse correlation. So the S&P is a positively correlated asset. If we want to try and find strength in the S&P, we might be looking for it to be reflected in Bitcoin. And if equities are looking strong, we could take that and kind of form a bias for Bitcoin using this information. An example of a market where we get inverse correlation, so the opposite of this, is the dollar index. Okay, so this is showing us the strength of the dollar, and generally in times where the dollar's performing very well, like we had throughout the entire 2022, risk assets do not perform well. And we can see in 2022 for the S&P, steady decline, and of course we had the same thing for the bear market for Bitcoin. Okay, so the dollar index is just showing us the strength of the dollar against other assets. And when the dollar's performing well, we can expect Bitcoin to performing poorly. And if we pull up the correlation coefficient and we change this to the DXY, okay, what we'll see is an inverse. Okay, you see how this is quite, it's basically flipped. I would say the correlation is not as strong as the correlation to the S&P. Okay, the inverse correlation isn't as strong as the correlation. And I think this is because the DXY also represents the strength and weaknesses of other currencies. Whereas the S&P and Bitcoin are more closely linked together, but we do see that there's definitely an inverse correlation that does seem to be prevalent here, and we do have some fluctuations in extreme examples, okay, but across the board we can see we spend much more time in the negative coefficient range, showing us that there is an inverse correlation between the two assets. So we can attempt to use some kind of technical analysis to see if we could expect the dollar index to start heading higher and use that to form a narrative for Bitcoin likewise. Okay, and to wrap it up, the last correlation we have is one that I don't understand why more people don't pay attention to, and it really baffles me, what I often see in the crypto world when it comes to, day trading and swing trading cryptos. And it's the fact that the entire crypto market is correlated to Bitcoin. Okay, so what we have on the left side over here is the crypto total market cap excluding Bitcoin. Okay, so this is showing every asset other than Bitcoin. So this is including Ethereum and all your altcoins. And you get the same kind of picture if you pull up Total 3. So that's Total 3 shows us the market cap excluding Bitcoin and Ethereum, and this is Bitcoin over here. And what we can see is they essentially follow each other to nearly a T. Of course, there's some slight divergences occasionally, but we see, you get peaks coming in at the same time, you get lows coming in at the same time. The crypto market as a whole does follow Bitcoin. So if you are looking to scalp trade altcoins, okay, scalp trade them if they have their own narrative, but most of the time you are just you want to do your technical analysis on Bitcoin and extrapolate that out to the altcoin markets. Look for altcoins that are performing better, performing worse, and look to take it from there, okay? But as you saw from this course, majority of my technical analysis in crypto is to do with Bitcoin. I do some different kind of analysis for altcoins. It tends to be high time frame swing plays, and yeah, I'm going to leave that at that for now.